Crypto prices starting the week in the red after a sharp sell-off over the weekend.
It's a tough operating environment, which I think you've pointed out for a while, to not be that bullish near term.
We have had this low volatility period. Today, familiar, but I guess reminders of a slowdown fear out in the economy, consumer confidence taking a hit, and then a mixed bag of earnings seems to have jolted the markets along with those bank concerns with First Republic. So is it just a blip or is it the start of something worse?
What a week we've had, huh? After last week's substantial price declines, Bitcoin finally broke out of its slump and soared above $28,000. Can the rally sustain, or will Bitcoin price fall to $25,000? Where are we in the crypto market today? How will the upcoming halving cycle and ongoing liquidity cycle influence Bitcoin's price and adoption? To answer all your doubts, in today's video, Raoul Pal has shared his views on where we are in the crypto market today and what we can expect next. He has also talked about why we might be witnessing a perfect storm of both halving and liquidity cycles converging at the same time. For more details, stay tuned till the end of the video. Also, be sure to subscribe to my channel for more latest updates on economy, crypto, and market. Let's dive into the video now.
I've mentioned many times, the whole crypto market is driven by two things: network adoption, which is the long-term trend, and then in the middle is the liquidity cycle. The liquidity cycle hit a bottom in June, and we started seeing the forward-looking indicators come up. And we've seen already the central bank balance sheet was led by China, Japan, and then the US. That liquidity cycle is in full flow now, so that should continue all the way through till 2025. And that's why we started Crypto Spring. It happens every time we get to this point. So forward-looking, the liquidity cycle should continue. And the banking situation is one of the examples of how the liquidity cycle comes in. The Chinese continue with M2 growth, the use of the central bank balance sheet. The Japanese have obviously been using yield curve control. So for me, we're in the right cycle now, and this should continue to play out. Now, within those, you get plenty of volatility. Usually you get 35% pullbacks are pretty common. Is this a 35% pullback we're in the middle of, or a shorter one? Don't know, don't really care. I did all of my allocation. I haven't sold anything ever. I just bought more in June, October, and January, and just used that opportunity into the big sell-offs, and that's it. So the tightening, it's not about interest rates, it's about liquidity. So the change in interest rates is a part of the liquidity cycle, but the central bank balance sheet is the predominant driver plus M2. There is about a 90% correlation between the price of crypto assets and a global liquidity index that we use, which is a function of the G5 central bank balance sheets plus the Fed balance sheet. Look at the G5 central bank balance sheets plus their M2. So look at the central bank balance sheet there with the Fed, and you saw that little spike, which was the injection of liquidity into the banking system, and all assets rose with that. And so, yeah, the interest rate rises are a red herring at this point.
The main factor affecting the value of crypto assets is network adoption, which is the long-term trend and liquidity cycles. You can see how the recent spike in the Fed's balance sheet, which was a result of injecting liquidity into the banking system, boosted all asset prices. According to Raoul Pal, this liquidity cycle is now in full swing and should last until 2025. This is why we see crypto spring every time we reach this stage. Another interesting phenomenon is the alignment of the Bitcoin halving cycle with the liquidity cycle. The Bitcoin halving creates a scarcity effect that tends to increase the price of Bitcoin. The liquidity cycle, on the other hand, is driven by the monetary policy decisions of the central banks, which affect the demand for crypto assets as an alternative store of value. The coincidence of these two cycles may amplify the price movements of Bitcoin and other crypto assets. Watch the next clip to learn about Raoul's insights and analysis on the crypto market. Also, be sure to like and share.
It's the same thing. It so happened that Bitcoin was launched exactly at the time that global interest rates went to zero. Everybody reset their entire interest rate and their entire debt burden at the same time, everybody around the world. So every central bank, every country, every corporation, everybody reset rates at zero. It's created, and most of that debt is between 3 and 5 year debt. And what you've got is this 3.5 year cycle to 4 year cycle, and it's a global phenomena, and it was driven by interest rates being zero in 2009, and that is the Bitcoin halving cycle, because Bitcoin was launched exactly at that point as well. So the liquidity cycle is the predominant driver. Now, doesn't mean it's wrong to follow the Bitcoin halving cycle, because it happens to be the macro cycle as well, and that's all well and good. And if people understand it in those terms, that's fine. But it is actually the liquidity cycle that is global, and it is a complete structural change to the world that happened after 2008. That if you look at the ISM cycle, so the Institute of Supply Managers survey, it is exactly 3.5 year cycles. And we've never had this before. And it's just driven by the debt refi cycle globally.
The global interest rates dropped to zero in 2009 and triggered a massive debt refinancing wave that affected every country, central bank, and corporation. This created a new macroeconomic cycle of about 3.5 to 4 years, which coincides with the Bitcoin halving cycle. Raoul Pal explains Bitcoin was launched at the same time as the interest rate reset, so it is influenced by the same liquidity dynamics. The ISM surveys show this regular pattern since 2009. It is a fundamental shift in the global economy that started after 2008. Some people use Bitcoin halving cycle to understand this phenomenon, which is fine, but according to Raoul Pal, the underlying driver is the liquidity cycle. Some analysts have argued that this is a Bitcoin-only cycle, and some say that Bitcoin's dominance was knocked by ETH's post-Shapella rally. Let's hear from Raoul Pal on Bitcoin and its dominance in the next clip. Also, before jumping ahead, be sure to give a big thumbs up to this video.
There is a risk curve, and people will move on the risk curve depending where you are. So when you're in crypto spring and there's uncertainty, you go to the safest, most secure, most known asset and the most liquid, which is Bitcoin. Then you tend to then spill out, and you see then Ethereum start to catch up. But as people become more confident in the cycle itself, you see it spread further out of the curve. And you're starting to see that already. I mean, Solana had a huge run this year. There's a few things that have had a huge run. It's not consistent yet. So it's very common that the Bitcoin dominance falls. It's the same in the credit market. People buy treasuries first, then they buy corporate credit, then they buy junk bonds, then they all blow up and we start all over again. I mean, it's a standard way that we operate. So it's very common. So crypto is no different than financial markets. Right now, if you look at the number of different applications being built on Ethereum, you generally think that the network will likely grow faster over time than Bitcoin, but that can change. We've got ordinals, we've got other use cases for Bitcoin. We could see global central banks or sovereign wealth actors involved in Bitcoin. So it depends. I think likely Bitcoin dominance falls over time because of the lower number of use cases. But you know, it's not something I worry about all day or think about. Yeah. I generally hold a basket out the risk curve, and it's kind of very weighted towards ETH, have a bit of Bitcoin, but then I will look for what I think gets network effects, and I think Solana has some potential of provable network effects. As Dan said, it's still kind of at the VC stage, but I see a lot of activity on chain. I see a lot of developer activity. I see a lot of wallet addresses, etc. So, you know, I hold stuff, including Doge.
In the crypto market, investors tend to adjust their risk appetite according to the market conditions. When the market is volatile and uncertain, investors tend to favor Bitcoin, which is the most secure, liquid, and well-known crypto asset. When the market is more stable and optimistic, investors tend to diversify into other crypto assets, such as Ethereum or Solana, which have higher potential returns, but also higher risks. Raoul Pal also highlighted that Ethereum has a wider range of applications than Bitcoin, which suggests that its network might grow faster in the future. However, this is not certain, as Bitcoin could also develop new use cases or attract more institutional investors. Raoul Pal thinks both blockchains have different functionalities and capabilities, and there is room for both of them in the crypto ecosystem. So what do you think? Do you agree with Raoul Pal's viewpoint on Bitcoin? What's your take on Bitcoin dominance ahead? Will Bitcoin reach new highs with upcoming Bitcoin halving? Let me know your thoughts in the comments below. And don't forget to subscribe to my channel for more updates and insights on economy, crypto, and market. Also, be sure to hit that bell icon to never miss any video. Thanks for watching, and see you next time. Adios.